And now it's quiet. I like that. How you going, team? Psst, boys. Here. Hello. I'm missing my 4 children, you can tell, can't you? I need so much to tell them. I'm not missing them at all. I'm loving the Gold Coast, even though it is a bit cold today. That's okay. Right, team. Got a very big last session to finish us off and some interesting opportunities. We're finishing with a silver shootout at the end, some really good silver opportunities for you. We know how important that is in the energy transition, but we're starting off with a new word to learn, or something that I like to say anyway. So let's invite this fellow up to us. So Kingsland Minerals, listed on the ASX back in 2022. They went looking for gold and uranium in the Northern Territory. And while they were there, they also found a bit of pesky graphite mineralisation in the way as well. I had a little look around and went, oh, maybe we should switch from that to this, because it seems like we may have a little bit of it. That little bit of it has turned into one of the world's biggest graphite deposits. 20-kilometre long schist. I love that word. So I could have said anything else about it and the 3 mineralisations, but I chose schist. So you get the schist of it. Would you please welcome this gentleman here? He is Richard Maddox, and he is their very happy Managing Director. Welcome, sir.
Yeah, thank you very much for that. And it's very good schist as well.
Oh, that's right.
Yeah. Look, we're a graphite company focused on graphite in the Northern Territory. I think this introductory slide here is, I guess, a summary of the presentation, but there's a few points to take out of it. The first there is it's 100% owned, obviously, up in the NT. The second focus is the scope, the size of the deposit. You'll see in some of the slides there, we've got considerable size potential in addition to our current mineral resource. The other one is the location of the project up in the Northern Territory. It's a fantastic location. And the third factor is to consider the graphite market and how that's developing, the global graphite market. So I'll start off there with the size of the deposit. You can see there that we released a mineral resource about 2 months ago, 194.6 million tonnes at 7.3% TGC, which is total graphitic content or total graphitic carbon, either or. It's currently Australia's largest graphite deposit with that inferred resource. There's a comparison here of our peers in Australia. That's all of the companies that have released resources in Australia. So you can see we're a fair size bigger than our next, the second size deposit there. And to put this in a global perspective as well, we're in the top 10 global deposits. Again, these are deposits I could find with published resources. There's no deposits there from China, obviously, with no published data. But you can see there we're a global top 10 deposit as well. And we released yesterday morning our exploration target update. Now we've got some more data from our drilling last year and a bit of metallurgical data, I should say. We had a bit of confidence to increase the exploration target. And you can see there the previous mineral resource down the bottom here, that's the 195 million tonnes. That same rock unit continues right up through our tenement there for a total of around 15 kilometres, like Chrissy said. And within that zone there, we've got potential for an additional 700 to 1.1 billion tonnes at a similar grade between 7 and 8. So that just illustrates the significant scope of this deposit. It's a world-class deposit and it's a big deposit. And the next slide you'll see there will emphasise the location of it. As we like to say, it's a Tier 1 project in a Tier 1 location. We're located in the Pine Creek Mining District. That's got a long history of gold mining back to the 1870s. There's a lot of modern mines there as well, which most of them are currently on care and maintenance, but several of them are due to get starting in the next 12 months or so with the increase in gold price. But there's a local history of mining there. There's local infrastructure in place for mining as well, and it's well supported by the local community. You can see there the road distance there is about 250 kilometres to the major port there of Darwin. There's also a rail access as well there if we ever need that. We're located very close to the main infrastructure corridor north-south into Darwin. You can see there's high voltage power lines, gas pipelines, sealed highways, and the railway line as well. So we've got a lot of transport options up to the port there, plus a lot of local infrastructure there to support the operation as it gets developed in years to come. So again, you can see it's the Tier 1 location there with the large deposit. The Tier 1 deposit there with the large scope there, and the Tier 1 location in the Northern Territory very close to a major port, and they're major considerations when you're looking at how we're going to market this project in the future. The geology there as well, it's one of the other main factors in this deposit is it's very simple geology, which makes it nice and easy to work on. It's a contact zone between granites and sediments. The sediments had carbonaceous material in them, and when the granites intruded that, the heat turned the carbon into graphite. So you've got this nice long zone right along that contact area there, which has got graphite schist all along it and contains graphite. Now, most of our drilling has been focused down the bottom here, the drilling we did last year for the mineral resource, but historically it was drilled for copper mineralisation over the last 20 or 30 years. So there's several holes in there targeting the copper mineralisation that have gone through the graphitic schist. So we know there's graphite there. Some of those holes have got a bit of sampling in them, and some have got some thin section work, which was highlighted in the release we did yesterday morning. So we're very confident of that exploration target being able to be converted into a mineral resource should we do more exploration in the future. That's a summary of our drilling we did last year. You can see it. One of the characteristics of it is very broad with a high-grade mineralisation. It's a consistent ore body. Again, you can see the very homogeneous, continuous nature along here. As you get towards the east here, it breaks up a little bit as there's a little bit of embayment into the granite, and that sort of squeezes out the schist into little zones there. But as you get away from that, up through here, it's very continuous all the way up there for the remaining 15 or so kilometres of strike length. So you've got a very consistent ore body, very homogeneous, and like I said, I can't emphasise it more, scope for size. That's a very important factor. That's a cross-section there. Actually, I'll go back there and show you where that is. That's just right in the middle of the ore body through here, and that's a fairly typical section through here. You can see there it's steeply dipping, about 100 metres wide at surface, and it outcrops at surface. And you can also, there I've highlighted in the purple along through here, some of the high-grade zones which are greater than 10%. So you can see there that you've got really good geometry there for the ore body for very cheap, cost-competitive open-pit mining. And you've also got high-grade graphite there above 10%. So any future mining scenario can tackle that high-grade straight away. And you can see with the width there of 100 metres wide, it doesn't take much imagination to think that the strip ratio will be extremely low and possibly in the first few years down to close to zero. So we should be able to get some very cost-effective mining done through there with open cut, targeting that sort of top 100 metres of the ore body there. Now, what's graphite used for? I think traditionally it's been used for industrial usages, lubricants, fire retardants, brake linings, things like that. In recent years it's been used for electric vehicle batteries. You can see there, this schematic here, you can see that every car battery typically has around 50 kilograms of graphite. It's by far the largest component in an EV battery, a lot more than the metals used in the cathode there, the lithium, cobalt and nickel and the like. So every car battery has about 50 kilograms of graphite in it. Now, if you look at the recent demand or recent growth in EV sales around the planet, we're currently producing, and this data for 2024 is based on the first quarter, so it's a bit of a projection, but you can see that they're targeting around 16 million electric vehicles. So 16 million vehicles times around 50 kilograms is a lot of graphite. So you can see the market is demanding more graphite all the time, and this is typically fine flake graphite. The coarse flake is used for the industrial usages more often, whereas the fine flake is used for the batteries. It's interesting to note too, you can see that most of that growth in recent years has been driven by China. But I think as car batteries get longer range, we get more infrastructure for charging around cities and countries, you'll see that places like Australia and North America will start to catch up. And you can see now that the EV sales in Australia are getting just bigger every month, especially when you compare that we've got no tariffs on cars, whereas Europe and America are starting to introduce fairly hefty tariffs on EV vehicles from China. So we're getting a bit of a benefit from that with fairly cost-effective, cheap EVs coming out of China. And there's an example of the demand going forward, which is driven by that EV use. Currently now about 50% of demand for graphite is driven by the battery EV use. In the next 5 or 6 years that'll grow to 80%, so obviously we need more graphite to drive that demand. Now, where's the graphite come from currently? Right now China dominates the trade. They produce about 2/3 of raw flake graphite, which is the product which at this stage we're looking at producing. They produce 99% of the spherical graphite, and that's where you break the graphite flakes down and make them into small little spheres around 10 to 15 microns in diameter, and that's the precursor to what goes into the battery. So right now China dominates that trade, and that's sort of driven a lot of the geopolitical considerations of graphite, with tariffs being introduced in America and Europe and the like to try and diversify the market away from that single product source of China. Now, we've done some metallurgical test work as well. It's again where this is a brand new discovery. We only discovered it about 12 months ago, and our first resource was about 2 months ago. So we're very early on in this journey of metallurgical test work. We released some results a few weeks back, and we got a concentrate of 94%, which is often quoted as being a marketable grade concentrate. So we're very pleased we could get a concentrate which we know we can sell. The recovery of that was around 80%, which is good. We can work on it and increase that. And it's a fine flake graphite. We're not targeting the coarse flake market. It's all fine flake. So we're targeting that EV battery use, which is predominantly dominated by fine flake. But like I said, we've only just commenced this long journey for metallurgical test work. Our next step now is to refine the flotation process and then to generate a flake graphite concentrate of around 20 to 30 kilograms and to send that to Europe, to Germany, and they'll do some test work there to assess its suitability for our end use, which will be probably a combination of battery EV use, spherical graphite, and also maybe some industrial usages as well for some of the finer flake. Now, again, where we are in Darwin is very important. Again, that Tier 1 location. You can see we're 2 hours drive south of the port of Darwin. We're excellently placed to provide flake graphite to sources in Southeast Asia and Europe and North America. They're all trying to get flake graphite away from that single source of China. In recent news, the US government delayed tariffs on graphite coming out of China by 2 years because there's no local supply. And if the local car industry was using Chinese graphite, they wouldn't qualify for the Inflation Reduction Act subsidies. So they've given them 2 years grace period to try and source graphite from other areas outside of China or other foreign entities of concern, as they call them. So I think you'll see markets, battery makers in the USA, North America and Europe will be looking for graphite around the world, which isn't sourced from China. And obviously we're very well placed to provide that graphite going forward. So just a bit of a summary there on what we've done so far. Again, emphasising that Tier 1 location and Tier 1 project. We've got one of the world's largest graphite deposits. It's 2 hours drive south of a major port, which has got easy access to markets in Asia and also further afield in North America and Europe. We've done the test work, which shows we can produce a concentrate of 94%, a fine flake concentrate, which is suitable for battery use, and that's the test works to come on that. The next step there is, like I said, that more advanced metallurgical test work. And once we get confirmation on a final product and we can produce a final product, we'll probably launch ourselves more into a feasibility scoping study sort of workflow. We'll do more drilling to upgrade the resource to indicated status, and we'll start doing some mining studies. We've already had very preliminary talks with some parties about offtake negotiations. So as we progress the project and de-risk it, I think those talks will become more serious. So we expect in the next 12 months to hopefully be updating the market on some progress there. And also, obviously, the on-the-ground work there as far as designing plants and processing plants. We've commenced the process for applying for a mining lease up in the Northern Territory. That process takes about 2 years typically, so we've commenced that. So I think you'll see the project start moving in the next 6 months or so and going forward hopefully to production a few years after that. Just a quick corporate snapshot there. We only listed 2 years ago, so we've only got 61 million shares on issue. The directors own about 21%, and Trafalgar Resources there is also a director-related entity, so the 3 directors of the company control about 30%. So it's tightly held, not many shares on issue, with a market cap now of around $12 or $13 million. I think you can see there's a compelling investment argument there, and there's a bit of upside based on the graphite market going forward. So just to reiterate what I've just said, we've got a Tier 1 deposit. It's globally significant, one of the world's largest graphite deposits. Fantastic location near Darwin. The graphite market is evolving. The world needs more graphite. The world's going to be making more EV cars, and the world is trying to diversify away from China. And I think we're really well placed to provide that supply of graphite products going forward. So thank you very much for listening to my talk. And if you have any questions, please see me in the booth. Thank you.
Thank you so much, Richard. We get the gist.
Thanks.
That was very informative. That's an interesting project, isn't it, everyone? Next up, one of our favourites at our conferences for vertical events. He's wise, this man. He's engaging. Flip the button up. He's got a great story to share, which I think a little bit like a fine wine, just keeps getting better as it gets closer and closer. So this is Dr. Mike Jones, by the way, for those of you who haven't had the good fortune of meeting him. He is the Managing Director of Impact Minerals. Please make him very welcome.
Thanks, Christina, and thanks everyone for turning up for the last session. It's been a great couple of days. So I'm going to tell a story. Once upon a time, there was a young English geologist who studied hard some of the time, and he was fortunate enough to be offered a job and a visa in Australia as part of a wave of cheap immigrant labour in the late 1980s. And that was me, of course, and I came to Australia and worked for a company called Western Mining Corporation. My job was basically to sit down and draw boxes on maps, looking to find the next generation of world-class gold and nickel mines, in the hope that we could push the company forward. I learned a lot about what makes and what doesn't make a world-class deposit during that period, and so I went on as a consultant to draw boxes on maps for other companies, and finally decided to draw boxes on my own maps for Impact Minerals, and we set the company up some time ago, looking for exactly that. Now, it's been an interesting career because during that period, I learnt a couple of things, especially early in my career. So the first one was don't get into bulk commodities or industrial minerals, because if you do, one of four things has to be true, otherwise you won't make it through the mining cycle. The first one is the deposit has to be very large. The second one, it has to be high grade. Or third, you have to have established client relationships who are going to buy the material from you. Or fourth, you have to be one of, if not the lowest cost producers of the material that you're digging out of the ground. We also learned that you shouldn't go to the Pilbara to find 10 million ounces of gold, because they just didn't exist up in those days. So during the rest of my career, I then learned a few things. So, of course, bulk commodities include iron ore. So back in the day, it was high-grade, BHP and Rio dominated. And then, of course, FMG came along, discovered low-grade iron ore and turned it into a world-class deposit because they found the right market and they did it at a low price. And the second thing was that De Grey found 10 million ounces of gold in the Pilbara. So it turns out a lot of things I learned early in my career weren't particularly true. But in all of those cases, and De Grey in particular, which is a long success story, 16, 17-year overnight success story, it's also been my experience that to do a one-mine small deposit is a waste of everyone's time and money. It's not worth getting out of bed to develop anything less than a world-class deposit. Too many companies with mines that have a market caps that are 150, 250 million, whereas if you can make the massive discovery like De Grey, you'll get to $1 billion market cap without even turning a sod of earth. So all of these things that I learned turned out to be not true, and so I find myself here today talking to you about high-purity alumina, which is an industrial mineral, and we believe that we have a world-class deposit here in Western Australia, which is where it's located. This is the lake. I like to call it the Magic Lake, not just because of how it looks at certain times of the day and certain times of the year, but believe it or not, in the top 2 metres of the sediment in that lake is something in the order of $20 billion worth of high-purity alumina. It's quite an extraordinary deposit. It's very unique. And when I first came across it, I thought to myself, goodness me, it's an industrial mineral. This looks like it could be a very cheap producer. We have the right to earn 80% of this project by completing a pre-feasibility study, which is now well underway, and we should be completed by the end of the year. And you can look up the details of that or come and speak to me afterwards about that. So one of the big things that's driven our price rise over the last few months is we released this scoping study in November last year. And it's really all about the economics. This is what makes it world-class. And the two big numbers to focus on here are a net present value of 1.3 billion Australian dollars. Now, what does net present value mean? That's actually the value of the material in the ground now. If someone was to come up to me and say, I want to buy that deposit off you, what's it worth? Write me out a cheque. That's what the value is right now. The second one is this. This is the operating cost to produce a tonne of high-purity alumina. And we believe that we can produce it for $4,000 a tonne. And we'll look at US dollar prices in a minute. And we believe that that's 30 to 50% cheaper than anybody else can produce HPA globally. So we stand at the precipice of being able to be a significant player in this marketplace. So where's the value proposition in Impact right now? Our current share price is 1.7 cents. We released the scoping study in November, traded about 1 cent until the start of this year. We had a very good run, lots of volume pushing through, reached a peak of about 2.5 cents. We've come back a bit. We did a placement at 2 cents. Probably the first time in many years we'd actually done a placement at a higher price than the previous placement. And so that was a great outcome. And we're up 60 to 70% in the last 6 months. And you consider what else is going on in the industry right now, that's a really good outcome. Our market cap's about 50 million, and so my job over the next couple of years is to drive that towards the NPV. And we're probably looking at that kind of gap, that kind of value gap that we can fill over the next 2 to 5 years. So this is a very good time to be looking at us as we pull back a little bit, and I truly believe that we're on the road. So what's going to drive that? As I mentioned, we believe we can be the cheapest producer globally. So this graph here is what we call the cost curve analysis. We've jumped a few years into the future, and we sort of imagine that the current producers, who are predominantly the Chinese and the Japanese, have got about half the market, and the new entrants, and the big player here is Alpha HPA, A4N, I'm going to talk about them a little bit, and then potentially Impact here. And these are the operating costs for each of these companies or groups of people. And the reason the Chinese and the Japanese have such high costs of production is that they make their HPA out of aluminium metal, which has been mined as bauxite. It's then been converted into alumina and aluminium metal by the Bayer process, environmentally unfriendly, energy intensive. And so the newcomers in the space, like A4N and hopefully ourselves, can produce things at a much lower cost. And so we believe that we can produce at significantly less than anybody else globally. What is high purity alumina? What's it used for? Well, if you recall, a few years ago, the Samsung phones were exploding in people's pockets, and not a very pleasant phone to have. And that's because HPA is used as a coating within the batteries to prevent heat build-up. So if those batteries aren't made properly, you get thermal runaway and they explode, and we see that as well in EVs, like the Tesla batteries catching on fire. So it's a very important part of that battery architecture. Second one is relatively banal. It's actually in LEDs, micro LEDs. If you go down to Harvey Norman, you buy your OLEDs and your ULEDs, they've all got high purity alumina in them. And increasingly now we're seeing sapphire glass. So the front of most of your mobile devices have got sapphire on them, as military uses, medical device uses as well. And it's possibly going to be the HPA decade. People talk about the lithium decade. This is a supply and demand graph. We've got the demand graph in blue up through here. And sort of by 20 to 30, significant growth in the LED market in particular, in the dark blue, and the lithium-ion batteries in the paler blue. And this is the supply side. And so they're sort of forecasting around about 2026, a supply deficit or tightening of supply. And that will at least be driven by offshoring, because, as you saw, much of the HPA is made in China. And the Western world is obviously trying to move away from that. So what is it actually worth? So we talk about high purity alumina. It's about, this is the benchmark, 4N, 4 nines purity, 99.99% pure. And its benchmark price at the moment is somewhere between $15,000 and $25,000 a tonne. If you take, average about 20,000, there's a significant market in 3N, not quite as pure. There's also very good margins to be made in very pure material, 5N and 6N. However, the volumes here aren't great. So we're very much focused in the 4N and possibly even in the 3N market as our entry into the marketplace. So we're entering a high demand and high margin business. And now, how much alumina do we have? Alumina is actually aluminium oxide. It's called sapphire. There's a version of it. Corundum, one of the hardest substances known to man. And we've got almost 1 million tonnes of it, of alumina that we can convert. And so if you multiply that by an average of $20,000 a tonne, then that's where we get our $20 billion worth of HPA in the top 2 metres of that lake. And that's more than enough to support 50-year mine life or more. So we're ticking off the boxes on what's required to get a world-class deposit in industrial minerals. So where are we? We're in Western Australia. It's quite simply the best place to work in the world for mining. Don't need to say much more about that. We're in the middle of nowhere, and these are part of the lake system. So Lake Hope is actually a system of many mini lakes. This is 1 kilometre here, and the resource that we have is in these 2 lakes, West Lake and East Lake, part of the larger Lake Hope system. And one of the natural advantages, man-made advantages to this area here is that there's a fire track that's been graded right in up to the side of the lake, and that will form the basis of the haul road when we start mining. So this is Roland Gotthard. He actually discovered the deposit through some great lateral thinking about other ways that we could get alumina out of the earth. And this is how we drilled out $20 billion worth of material with a rubber mallet and a push tube. And we did the entire drill program for a cost of 60,000 Australian dollars. That is actually the best return on a drill program you're ever going to see. And it comes out looking like this. It's almost like plasticine, and it's naturally less than 1 micron in size in most cases. And that gives it some very interesting kinetics, because basically when we drop it into the vat of reagent, it just goes straight into solution, because it almost has an infinite surface area, because there are trillions and trillions of particles, fine-grained particles in that material. So this is the East Lake, and an example of how we might mine this thing. We've got a high-grade centre in through here, and we're simply just going to drive in off the side with a digger. We're going to mine for 8 months, stockpile 3 years of supply, and then we're going to truck the material off-site to Perth, where we're going to process it. So that's going to give us very low-cost mining. So compared to normal hard rock mining, we have no drilling, there's no blasting, there's no crushing, and we're just going to haul it off-site. We're going to leave a hole in the ground that's about 1 metre deep. We won't need power on site, we won't need water. It's going to be a very, very cheap and environmentally friendly process. We've already ticked off the baseline environmental surveys. Nothing lives on the lake. Natural pH there is 3. If you stand there for too long in your boots, your boots will actually melt. So it's a pretty acidic environment. And we can get this material to the plant for less than 5% of our overall operating cost, and that's, again, a very low number. We've got a very good relationship with the Naju community. They're based in Norseman, long history of mining in through there. We'll be entering negotiations with them shortly to get a mining agreement in place. We've already had heritage clearance on the lake surface, so there are no impediments from a native title perspective of mining on the lake. I won't dwell too much on this, but we have a couple of processes that we can use to produce the HPA. The scoping study was based on the sulfuric acid leach. We have a new leach which is done at a much lower temperature and we think is far more cost effective. And one of the outcomes of the pre-feasibility study will be to choose which method is the one that we're going to choose. It'll probably be the LTL process. It's a low temperature leach. We did call it the slow cooker method, the SCM method, because Roland did all of the experiments on his kitchen bench. And so his wife was certainly glad when we got the joint venture with him, because he was ruining all the slow cookers that he'd bought from Harvey Norman. So it's that easy to produce the precursor for HPA. So there are 4 pillars to the pre-feasibility study. We'll have a big update out on this in the next few weeks. We're doing a lot of metallurgical test work to optimise those 2 processes, and I say work out which one is going to be the one we'll move forward through. Doing a lot of work on the mining approvals. We believe that we can get this the mining lease approved in a relatively short period of time because of the low environmental footprint and our good relationships with the Naju peoples. We've also been looking at where the process plant location will be. That will almost certainly be in Kwinana, near the port, and a lot of pieces of the jigsaw puzzle for that have fallen into place recently as well. And this is the big one. It's all about offtake with your clients and providing materials that they want, and we won't be ready for that until later this year, until the start of next year. But what I can say is there's certainly demand out there for the product, and that's been demonstrated by Alpha HPA, who I talked about recently. So about 5 years ago, they were a junior explorer like us. They came up with a new method to make high purity alumina. And progressively over the time, their market cap went from $20 million to $1 billion, and they've just won $400 million of grants to help build their 10,000 tonne per annum plant from the Australian government because of the critical minerals nature of the material. It's a fantastic success story. It's a Queensland success story. We hope to follow in their footsteps. Alpha have quite clearly stated that whilst they're building a 10,000 tonne per annum plant, they've probably got indicative interest for at least 30,000 tonnes per annum of HPA. And so we believe that we can start filling that gap over the next few years. So Impact Minerals, we have been around since 2006. We've just done a capital raise. We're well cashed up to finish the pre-feasibility study, which will be done, as I say, on schedule by the end of this year. We've always had very strong support from German shareholders. We have 2 in particular. We have a family office out of Dusseldorf. They've contributed significantly to the last 2 capital raisings. They own about 17% of Impact. And ABC is a well-known investor in the resources sector across Australia and in Canada. So it's been a great journey since we got this deposit. So the big plan this year, as I say, we're going to complete the optimisation on the test work. That's the critical thing. We're going to move forward with the completion of the pre-feasibility study, start to look to put up a pilot plant and get material into clients' hands later this year and into next year, and hopefully get a definitive feasibility study done and into small-scale production by 2026, which, if you recall, is when the supply deficit should be starting to kick in. So really invite you to come on the journey with us with Lake Hope. It's a unique deposit. We're super excited about it. We've got the right team, right people on the bus, and so we aim to be one of the lowest cost producers of HPA globally. We've got a unique deposit in Western Australia, the best place to work. We've got this cost-disruptive metallurgical process in PFS, and we're rapidly building out our capabilities in metallurgy, final product specification, and hopefully we get our timing right to deliver into this high-demand, high-growth business in 2026.
Well done, Dr. Jones, like a fine wine. What was that?
4 seconds over.
That's another hitter there. It took me 10 seconds to get off the stage. Right, you know that I like going and investigating, having a chat to our presenters before they come up on the stage and finding a little bit about them. Now, when I went to Rob Rutherford's stand at Red Metals, and there was a group of them just gathered around there, and I asked them a few questions, and it seems that I unleashed a bit of a cat amongst the pigeons because they all had differing opinions of how their fantastic project should be portrayed to you all. So I'm going to sit back and see how it all unfolded. All I know is it's actually really, really good because they were trying to figure out what degree of good or how they could explain to you how bloody good the project was. So would you please welcome Rob Rutherford to educate and entertain you.
All right. Thank you. Sorry we couldn't come up with a quick buzz line for you so quickly. But, okay, look, I'm assuming that none of you have been before and that you're not familiar with Red Metal and the company that we're involved with. But we listed 2003, 21 years ago. We basically look for base metals, giant copper deposits, Queensland mostly, WA, South Australia. But along the way, we found a significant rare earth deposit about 2 years ago. And we've been doing metallurgical test work on that and some early stage drilling, and it's starting to look pretty significant. So I really want to introduce that project to you. Just, we'll get into it. This little snapshot shows our share price history more recently. We listed, as I said, 2003 with 80 million shares when we listed in 2003. We've now only got 300 million shares on issue. There's been no share consolidations in that. And the reason we've been able to do that is because we look for giant base metal deposits, and a lot of the majors have funded a lot of our work since 2003. We've had arrangements with Freeport, one of the world's biggest copper companies, or Phelps Dodge, Oz Minerals, and we've been spending about $2 to $4 million a year on base metal exploration. During that period, we've had a bit of success and recently spun off one of our base metal successes with Morona Metals. They've got 2 30 million tonne lead, silver and copper gold ore bodies, and Rich is going to be coming to talk to you about that after me. But I'll concentrate really on this talk about the Morona Metal, about our rare earth discovery just 20 kilometres southwest of Mount Isa. And this is a little quick flash of a summary of the news flow that's coming out of the company over the next this year. We're doing a lot of work on this rare earth deposits. We're doing this, a fair bit of the step out drilling was just finished last week. So in the next 2 months, we're going to get a lot of assays back from that. We've done these initial bottle roll tests, and I'll take you through some of that metallurgical results now. And we're doing impurity removal trials as well to try and just optimise the leachate and get some of the impurities out. But we also started the column leach test work, so that's the next stage after the bottle roll tests, trying to just optimise those metallurgical recoveries so we can then get a bit of a process flow sheet for this thing. We probably do some resource definition work towards the end of the year once we get the assays back from this last lot of drilling, and then we'll be looking to do an advanced mining study. We're also in the background doing a fair bit of base metal work, possibly some drilling with BHP in the Patterson along strike with Winu and the Havieron discoveries, and also some big base metal targets we've got grants for from the Queensland government in Queensland to do that work between now and the end of the year. So there was a fair bit of that going on. We still own 44% of Morona Metals, which is Richard's going to come and talk to you about. And so in a lot of ways, you kind of get a lot of that stuff for free. But really what I'm going to talk to you about is the rare earths. So it's this new discovery. It's a little bit unique. It's a bit of a world first geologically. There's nothing quite like it been found or reported in the world. It's 20 kilometres southwest of Mount Isa, comes to surface. It's 12 kilometres long, 3 kilometres wide granite that's got rare earth mineralisation in it. I'll just give you a little quick rundown on the basics of rare earths as it stands, the geology of rare earths 101 in the world at the moment. And there's really, if you boil it down, there's 2 types of deposits going around, broadly speaking. There's these complex high temperature deposits on your left. They are monazite. They're a phosphate mineral, and they're full of thorium. You have to heat those minerals up to 800 degrees to crack them, then leach them with acid, and they require a very complex hydromet plant. It costs you about $1.5 to $2 billion. Lynas Minerals and Aluka are dealing with those sort of projects. They've got a market cap of around 7 billion. I think Lynas is 5 to 7 billion or something like that. On the other hand, and these new emerging deposits that have come out of the recent rare earth boom are these simple low temperature leachable deposits. There's these clay-hosted ionic ones which have been known about in China and been more recently discovered in Brazil. There's these clay-hosted non-ionic ones, and there a lot of the Australian clay deposits have turned into that, and they're not that favourable because they use hydrochloric acid to get the rare earths out, so a bit more expensive processing. And then there's this thing that we've discovered, this granite-hosted Sabella rare earth discovery. It's not like the clay deposits, it's got no clay in it, it's just a granite that you crush and leach. And these offer the potential for really low capex, really low OPEX operations. And as we're finding with our deposit, that's potentially a bulk mining heap leach operation. They're the lowest cost type of operations in the world. So a little bit about the geology. It's hosted, as I said, in a rare earth enriched granite. It's 12 kilometres long, the granite, and it's 3 kilometres wide that you can see in the geophysics. It's basically the bulk of the rare earths occur in this soluble fluorocarbonate mineral. So it's a really soft mineral that's easily dissolved, and it's got the rare earths in it. But the important point is that this soluble fluorocarbonate mineral is hosted in a granite that doesn't react with the rock. So you don't lose any acid when the acid doesn't react with that rock. So that, in a lot of ways, is what we call what I call metallurgical nirvana. There's a buzzword for you. Metallurgical nirvana, and because some of the great tier 1 copper deposits in the world, and the company that I used to work with was called Phelps Dodge, the giant Morenci deposit, that has soluble copper in a low acid consuming porphyry granite host rock. And the Escondida deposit in Chile, which is run by BHP, they're similar types of things. So the key is low acid consumption, low acid consuming ore mineral in a non-reactive, unreactive, non-acid consuming granite rock. And those two factors together are what make tier 1 deposits in the copper space, in the uranium space, and we think we've found one here in the rare earth space, which makes it globally unique. So we did some drilling about May, June last year. 2 fences aligned, proof of concept. And from that drilling, we've revealed these 2 1 kilometre wide zones within the granite of high grade mineralisation. And these zones extend, are open-ended, and they extend north and south kilometres. How far remains to be seen. We've just done the drilling. But there's another traverse to the north, and that's 4 kilometres away, and that's got the rare earth mineralisation in it as well. We've just completed, as in a couple of days ago, completed this step-out drill program here, shown in black. We've got the assays coming from that probably over the next 2 months. And that'll show to the market that we do have this continuity of grade, and we'll start to see the size of this thing come up. You're talking in the orders of billions of tonnes of rare earth soluble rare earth mineralisation potentially if these assays come through. In the meantime, before we did a lot of the drilling, and just as we started that, we did a series of leach tests on some of these bottle roll leach tests on the previous proof of concept RC chips, and I'll take you through some of those bottle roll leach test results now shortly. But we're also, in parallel with that, we're doing impurity removal trials, and the results from that are going to come out in the next couple of weeks. We've started the column leach test work probably next week. We've just completed the drilling. We've done a lot of mineralogical work, and hopefully by the end of towards the end of the year, we'll get the assay results back and start doing some infill drilling to get an indicated and inferred resource, which will enable us to punch out the mining study. This is typically what it looks like. You've got your fresh granite, weathered fresh granite on the bottom, the weathered granite on the top. The weathered granite goes to about 10 metres, the transitional stuff's about 10 metres, and the fresh granite keeps going forever. We've using seismic refraction to map that weathering profile, so that's been quite useful for tying the geology between the drill holes. But it also shows us, the seismic refraction allows us to show which bits are rippable. So all the blue stuff is easily ripped, really soft digging, and then the red stuff has a drill and blast component to it, and then crush. The bottle roll tests, they're kind of essential when you're dealing with commodities that you don't know a lot about their metallurgy. To define ore by definition, you have to have you have to be able to prove that you can actually potentially extract it commercially. That is the definition of ore. And unfortunately, a lot of the rare earth projects you see don't do metallurgy early. They drill first and then do the metallurgy. We've taken a slightly different approach in that we've done a lot of the metallurgy before we started the Big Step Out program. And we've shown that we can actually extract the rare earths from both the fresh and the weathered granite, and it's also shown us that this rare earth mineralisation is potentially amenable to heap leach processing. So it changes the way you approach this project once you know those sort of factors. We've also the bottle roll technique work that we've done has really shown us what to do with what are the pH parameters, what are the crush sizes, and what are the residence times we need to use then for the column leach work that we're doing at the moment, so that you need one to do the other. So a little bit more detail into some of the stuff. I won't dwell too much on this because it's all a bit heavy, but if you want to have a look at this stuff online and some of our announcements, dig in. But basically, we've been playing around with higher pH, some of the high pH leaches. We've been able to get over 83% of the neodymium out, but maximum up to 92%. We've also, but there are probably some of the important things that come out of this, that we're still leaching the rare earths after 28 days at pH 1.7 and 2. And we're also, what a lot of this stuff has been telling us is that we've got to extend the leach times for a lot longer till terminal rare earth extraction at a much weaker pH. So that all has the effect of really lowering the cost. We did that for the weathered, but the real breakthrough for us came when we did with the fresh. We had some very coarse samples, minus 15 mil, big as your thumbnail or bigger. We leached that stuff, and at pH 3, which is a really, really weak acid, it's probably like lemon juice, we're pouring that effective lemon juice over the rock. And out of that, we're getting all the rare earths. But more importantly, we're not getting all the rare earths, but we're getting 50% of the rare earths. But the rock was still leaching at the end of 56 days. We're still getting rare earths out. But more importantly, we've stopped the iron and aluminium coming out. So we've reduced these impurity levels in the rock as well. And that's a key point, and it's really probably a hard point to articulate. But you can sort of see it here on this little line here where this line's gone flat and these ones keep going up at pH 1.7 and 2, and this is going flat. So the aluminium and iron is basically switched off effectively once we go to these pHs of 3, and so these weaker acids are not dissolving iron and aluminium. And that has a huge impact on the economics of these things. So that was, in our mind, it's a pretty significant breakthrough moment. And it's showing us that this thing really is a heap leach operation, because with the heap leaches, time isn't your enemy, time's your friend, and you can leave it out for 120 days, a typical heap leach would go for. So this is telling us we've got two processing options. One, pH, a really weak acid of using coarsely crushed rock over a slow leach time, which will release low impurities and result in a low acid consumption. And we just need to confirm this now with some column leach test work, at which we're starting next week, and that'll run over 120 days, and we'll run it to rare earth termination. The other option is something we're playing around with as well, a more aggressive acid leach. It'll bring bit more iron and aluminium, but we're doing a whole lot of innovative impurity removal trials at the moment to see if we can get that stuff out. So that news flow will come out in the next little while as well. In parallel with a lot of this stuff, we've done comminution tests. It's basically you're crushing granite to 10 to 15 mil. That is technically very soft and basically means very low energy consumption, very simple crushing circuit. So these are all the boxes you need to tick for a heap leach process. I'll just leave you with this kind of last slide. Basically, these are the two of the biggest heap leach operations in the world. Freeport's Morenci deposit and BHP's Escondida copper deposit. Just shows you the scale. They're 10 to 20 million tonne per annum processing. They've got crush sizes about 19 or 20 millimetres. So it's the kind of magnitude. We're talking 10 to 30 million tonnes per annum of throughput, 60 to 90% recovery. 10 to 20 mil crush size. So all that will possibly translate into a really, really low-cost bulk tonnage operation. So I think there's all the use flow again. So we'll just stop it at that.
Perfect. Well done. What did you think, everyone?
Thank you.
Well done. It's good, isn't it? Good. So we've got 3 really good ones for you to end. We're finishing off with 2, well, a bit of a silver shootout today between 2 of Australia's biggest underdeveloped silver stories. Oh, Jeremy, I thought you were going then, mate. No, everyone meet Jeremy over here. Put your hand up, Jeremy. It's nice to meet new people when you come to these conferences, and we like to get a bit of community. Jeremy, you may have recognised earlier this morning, he was the man walking around in a pair of shorts. But now it's too cold for him, so he's gone and got himself a pair of pants. There you go. Did you buy them with the money that you've made at this conference? I should hope so. He's a professional investor, that one. I'd follow him around. He knows what he's doing. All right, now these guys know what they're doing. So the 2 biggest underdeveloped silver stories, that's what we're going to focus on for the end of this conference. They're at different stages of their development timelines. Up first, we have Marinin Metals, advanced exploration. They're based here in Queensland, and then we have Silver Mines, who are based in New South Wales. They are permitted. They're both really compelling stories. So great opportunities for any of you who are interested in getting a bit of exposure to silver. And we're starting with this fellow here. This is Richard Carlton. He is the MD of Marinin Metals. Would you please make him very welcome, everyone?
Thanks very much, Chrissy, for the introduction. Love the reference to the shootout, but it almost sounds like we're in competition. But I think what you're going to see, our story as well as the Silver Mines story, are both very compelling ones that when you look at the current deficit of silver production compared to demand, there's room for both of us. And I think for you as investors and contemplating an investment in silver, there's room for both of us in your portfolio. So I'd commend you to sort of stay on and hear, I think, a very engaging presentation from Joe. So yeah, Marinin Metals, we've been in existence as an ASX listed company for just 2 years. As Rob referred to just now, the deposit was owned 100% by Red Metal, and in 2022 they spun out 50% of it to give it its own life as ASX listed Marinin Metals. And in the throes of doing that, raised $15 million and gave us the brief to turn an exploration discovery into a mine. So that's what we've been focused on in the last couple of years. And I want to take you through a little bit of that journey, but importantly leave you with, so what's next? Where are we going now? But suffice it to say, we've been very pleased with the progress we've made to date. Our obligatory disclosure, which is available on our website for you to look at in time. I'll just touch very briefly on this, the case for silver, because I know when Joe comes up, he's got a sort of a far better description of a number of the nuances of the silver market, which I think is not necessarily all that well known in Australia, and he gives a very good presentation of that. But the key thing I want to point out on this is this big deficit between the demand and the supply. And the US-based Silver Institute have recently put out their annual report, and it's shown that for the last 3 years there's been a deficit, and importantly around about 200 million ounces each of the last 2 years. So there's plenty of scope for people to come in and produce silver without being in competition with each other so much. So I think we all need to sort of support each other. Quick look at our corporate chart, and we started out with 150 million shares on issue. It's now at 200. We've just completed a placement and a fundraising that was very successful. We raised $9 million through a placement which saw us attract our first corporate investor, a new institutional fund, and some other sophisticated investors. And then importantly, the board decided that we really wanted the existing shareholders to have a chance to invest with a share purchase plan at the same price that those that had participated in the placement. And quite frankly, we were overwhelmed by how well that was received. There'd been a target set of 1.5 million, and in fact we were able to raise 3.3 million. So I think, to me, how I took that was the existing shareholders, a strong vote of confidence in the project itself, and I think the team for delivering what we've said we're going to do over this last couple of years. So we took a lot of encouragement out of that. You'll see up here we had, at the end of March, $1.46 million in the bank. We've since raised the 9. So as at today, with some money that was spent in the last couple of months, we sit here with $10 million in the bank, well poised to deliver on this next phase of our development. I liked yesterday's presentation by Chris Stevens at Coda Minerals when he emphasised the importance of the team in delivering on something like this. So you'll see we have just a board of 3 and our exploration manager, Andrew Barker, who is here as part of our contingent. We're the only 2 full-time employees, but we're well sort of supported with consultants that have got a track record in building mines, and our key one is Dean Fredrickson, who's been part of more recently the development of the Hera deposit. So I think I like what Chris said. You've got to have the team. It doesn't matter how good the resource is, and that's something we've got that I'd like you to take away out of this this slide. So there's four things I want to sort of maybe think that you could consider as an investor. Why would you get involved? And one is where we are, the size of it, the amenability to mining, and then how far we've gotten on the journey so far. So firstly, you can sort of see here where we're located is in this Northwest Minerals province in Northwest Queensland, and you can see all the mines, the large mines here, and I think importantly, the ones with the blue circle around them are world-class mines that are lead mines. And some people sort of say, well, you're marketing it as a silver story, but look, there's a lot of lead. Well, in fact, 31% of the silver produced in the world comes from lead mines. And so, we're one of those, and we're right in what we would call, elephant country for this sort of deposit. We're also very close to good infrastructure because of all these other mines are here, whether it's roads, whether it's rail, whether it's access to port. So that Tier 1 mining jurisdiction, which you've heard bandied around from a number of people, exists for us as well in Queensland. The next thing, so that's a big tick for us. The next thing is the size. So this is, there's no small deposit. As Rob mentioned in the previous talk, there's 2 zones of mineralisation. Both have got more than 30 million tonnes of inferred resource. That's a copper gold as well as a silver lead. To give you some sort of idea of the size, we've got, I've just sort of overlain this is the host rock for the silver lead, laying over a map of Sydney. So you can see there it covers Hyde Park. It's about a kilometre long. If you're in Brisbane looking at the Brisbane River, it goes from the Victoria Bridge to I think the Goodwill Bridge. It's sort of as a bit like it snakes around the river there, and it's about 1,200 metres deep. To give you some concept of that, here on the Gold Coast, Australia's tallest building, the QI Tower, is 322 metres high. So it means we have this mineralisation going 4 times the height of that building at depth, and the mineralisation is still open at depths. We look at the size of it. You've got the 2. You'll see that in the 2 colours there, the mineralisation, silver lead, there is a western and an eastern horizon. They're separated by about 20 metres, and they go from a width varying between 4 metres, which is the height of this room in here, through to 20 metres wide, which is the full width of this building. So it's sizable. I just want to get that sort of message across, and we've got good grades. So there's a tick for that one. The next one is the amenability to mining. So it's a nice sort of steeply dipping deposit. So very amenable to the using gravity for mining. There's seems good competence of wall rock, so geotechnically it looks good. And each of these mineralised zones are separated enough that we think that we're going to be able to mine each of them separately, concurrently, and which is really augurs well for a good productivity. And we've and we've just declared our first sort of maiden resource in this as well. So that sort of touched on the geology and the geometry. So there's a tick for that one. And then finally, where are we along the pipeline of getting this dream of turning it into a mine underway? Well, I think importantly, when we did our update of the resource after the last round of drilling, we declared our first amount of our maiden indicated resource, and that's the next level of certainty up from the inferred that we had, which was drill holes that were 200 metres apart. We now have an area that's got 2 million tonnes where the drill holes are just 50 metres apart. And the great news out of all that was we're seeing that the continuity, the quality and the thickness of the material in those zones are standing up. So we put a big tick in that box as well. So in March we declared our this new resource, and this is where in this starter zone, which is something that we've delineated here, which is 500 metres long and 600 metres deep. It's been an area of focus for us because we thought if you've got something that big, we just can't afford either the time or the money to drill the whole thing out. We'll focus on something that would be likely to be a mine should you get something developed. And you can see the magenta polygon here. That's where the 2 million tonnes of the higher confidence material is. So we're very pleased with that as a starter, and that's something that we've got to build on and improve the amount of indicated material. That will allow us to any of the studies and the economics that we put to the project to be able to make them public. At this stage we can't. We can get as excited about it internally by all the studies we do, but we're hamstrung by what we're allowed to report publicly. I'll just keep going on this. What I want to just do is show you the sort of the evolution of where we've got to. So this was what we inherited. This is the sort of drill density when we took the project on, and we had an inferred resource. The drilling that we did last year, you can see, has increased the density, and hence up there in the magenta polygon is the indicated resource. That's what we need to get to that sort of density in the rest of the starter zone, and that's what we're targeting doing. And if we look at, this is another look at the lead silver. You can sort of see over here, this is what we call a long section. It's like if you were walking up to your house and you're looking at the front of the house, that's what this section over here is. And over here on the right is if you were standing at the side of the house and looking at what we call a cross section. So over here, when we took the project on, there was only one hole here. It was drilled in 2007. And we've sort of built on that and got it closer and closer to the surface, pleasingly with wide intersections of high grade. We also have this copper gold resource, and that has not had the priority of attention just yet because it won't come into any sort of mining schedule until a bit later. But that is also in its own right a very valuable resource. In April, we announced some metallurgical results which were very pleasing. Good results with the silver lead, with a better than 60% lead concentrate able to be produced with a better than 1,000 grams to the tonne silver assay. Copper gold with 20 to 25% copper concentrate, both very saleable things. So what are we headed to do now with the funds that we've just raised? We've got a commitment to a program of between 7,000 and 10,000 metres of drilling. which we figure we will complete over the balance of 2024, which will increase the amount of indicated material in this starter zone, and hopefully allow us to put out do an update to our scoping study with the economics that we can talk about more widely. We'll do further metallurgical test work, and we'll undertake environmental studies, which we've already started, got those baseline things happening and underway, but we'll progress that, and start a number of the other studies, technical studies and costing for a pre-feasibility study. So this is just a summary of the points with the news flow going forward. It'll be the drilling, it'll be doing the scoping study, we've got stakeholder engagement, improving our sort of profile, which is attending conferences such as this, and the next one will be the Australian Gold Conference in Sydney. So thanks for your attention, and come and see us. Well, probably the conference closing up, you're not going to come and see us, but please be in contact, and thank you very much.
Thanks very much, Richard. Did you say you're going to the Gold Conference? He did, didn't he? Okay. I like that. I was reading up on things to do with silver while Joe Battershill comes up here. G'day, Joe. Hello.
Hello.
The big fella's given you your intro. I think you did a bloody good job, actually. So Joe, of course, is the MD of Silver Mines. But I was just looking up silver, you two, and one of the things, the 10 quirky facts about it, was that silver has been... silver is a fun word, and the word comes from an Anglo-Saxon word, silfor. It's notoriously one of the only English words that does not have a rhyme. You can't rhyme silver with anything else. And I don't want you to distract away from the speech that he's about to give, but nevertheless, if you can think of one in 15 minutes, you can yell up and we'll find you a prize. Would you please make our last presenter for 2024's Investment Conference very welcome.
Thank you, and I truly appreciate everyone sticking around for the graveyard shift here. Look, there's a large number of statistics and interesting facts about silver, and hopefully I'll share some of those with you today. I mean, just for your benefit, it also was referred to salt, because the silver refers to the word. Also referred to the word salt because the Roman soldiers were paid in salt.
Okay, fair
So
call.
there's-
I also know that
there's-
silver and money are the same word in 14 languages.
that's
There you
right.
go, use some more useful things. Quick, what's happening at your project?
Right. A bit of an introduction. I mean, we've probably not done too many of these conferences really, because we've been sort of busy getting the project at Bowdens to the stage it's at now, and thanks to Richard for some of those kind comments about silver mines. In a way, we view the silver market very differently to how people look at the gold market in Australia. We're really sort of orphans in that when you look at the gold sector, there's hundreds of companies, and there's some great companies, and building a gold project in Australia, it's I wouldn't say it's easy to do. Nothing's easy to build, but there's a lot of them done. It's very successful. Unfortunately for Australian investors, silver's been a bit of a graveyard. There's, with the exception of Broken Hill, which obviously was an amazing silver deposit that made BHP, and Cannington, which is in South 32, there's not a lot of successful silver projects really, or certainly primary silver projects. And so we're sort of hoping to shift that needle a little bit. But as you'd appreciate, in North America and Europe, silver is highly sought after by the investment community. So we tend to see ourselves, and we spend a lot of our time marketing into those markets. And part of this really, this presentation, and similar to Richard, but I'm a little bit hamstrung as to what I can say, because as part of this process with the Bowdens project, we ran a feasibility study in 2018, which under the New South Wales permitting regulations, you have to have a feasibility study to demonstrate economic viability before you can go into the permitting process, before you can put your application in. So we did that in 2018. Then we just got lost in the what is the vacuum of New South Wales permitting, and we received the IPC approval, the Independent Planning Commission approval for the mine development from the New South Wales government last year. So that was a major bit of work, but it's taken time. At the moment, we're going through the optimisation of the project, and my guys on site, I've got 30 guys on site who are juggling about 150 balls, and all those balls are starting to land at the moment with all the data that's going to feed into this optimisation or bankable feasibility study that we've communicated to the market that will be done in August. So the project itself, location, this is not a hardship posting. It's 3 hours northwest of Sydney. We're about half an hour or 30 k's out of the regional town of Mudgee, which is a lovely place. It is the largest undeveloped silver project in Australia. It's not the highest grade, and I'll talk about that. But it's also the 4th largest undeveloped silver project in the world. We're up to just under 400 million ounces. We've got a resource update coming out in the next sort of 3 to 4 weeks as part of the news flow. I'm kind of hoping it's infill drilling, so don't expect too much updates from that. But we're hoping to sort of squeeze over that 400 million ounces. I'm not a fan of silver equivalents. I'm not a fan of any equivalents. People want to know what it is. So that resource is about half of that is silver. So it's about just under 200 million ounces of silver. More importantly, when we get this into production, the reserve is about 100 million ounces of silver equivalent, of which 70 of that is silver. So I prefer to look at it from a revenue perspective. Investors want exposure to silver, not silver equivalents. So when we're mining this, revenues will be about 70 to 75% silver. I call it the metal of the future. Silver is the metal of innovation. I was at the future-facing metals conference in Singapore a few months ago, and one of the locals came up to me and said, "What are you doing here? This is silver. What are you doing? This is the future-facing conference, future-facing metals conference." And he then put his mobile phone and his iPad down on my table, and I said, "Well, you know what's in those, don't you?" And genuinely, there was no understanding of just what silver is used for. And I think you guys, I've had a lot of existing shareholders come up to me over the last couple of days, which has been terrific, and it's been a great opportunity. So I think people in this room are probably a bit more wise as to what silver is used for, but it's got an enormous number of uses. There are many arguments that support the silver thematic in whether it's industrial, monetary, or as a tangible asset. And I think we're seeing. Someone earlier talked about the lithium decade, or I think it was Mike, the aluminium, the high purity alumina decade. Well, silver doesn't have a decade. Silver's been around for hundreds of years, and we're moving into this energy transition where silver is the ultimate green metal. Everyone talks about copper. Copper's more investable. There's more companies. There's bigger assets. The demand in terms of the volume is there. But fundamentally, there is no greener metal than silver. It is in everything we use. It's in terms of the energy transition and batteries and the solar panels, and we'll talk about that in a minute. When it comes to the key sort of industrial uses for silver, one of the biggest drivers of it is that it has got the highest electrical and highest thermal conductivity of all the metals. There is a conductivity scale that goes from 0 to 100. Silver is 100. So it just has advantages over everything else. And another interesting stat for Chris is, with the exception of oil, silver has more uses than any other traded commodity. It's used in more end products than any other commodity other than oil. But there's a lot of numbers on this page, and there's a couple I really want to talk about, and Richard touched upon it in terms of the deficits. So, do deficits matter in metals? Well, when you look at the metal prices, generally they only matter for a short term, for a short period of time, until they don't. And with silver, we've had 3 years of deficits, and quite large deficits, and the deficit forecast for this year is another 230 million ounces. So over the last 4 years, including this year, deficits will be about 800, or just under 800 million ounces. That's a year's worth of silver production from mines. What we're also seeing is visible stockpiles of silver globally. In the last 2 years, they're down 30%. So people are taking silver out of stockpiles and and using it. It is getting consumed. So that's a very different sort of argument. That you don't have that for gold. I like some of these gold-silver ratios, and just how much of a sort of an ex-analyst I used to be. I am. I mean, the gold-silver ratio. People always look at the gold-silver ratio. You know, it's 80 to 1. I mean, its long-term trend is 60 to 1. It's been up to 100 in the last couple of years. When it's high, gold's outperforming silver, and when it goes the other way, silver starts to outperform. I think we see the gold-silver ratio go back to long-term averages. So I tend to think that silver's going to outperform gold in this period. But interesting that those other two ratios are quite interesting. You know, in terms of mine production, the actual production ratio is 7 to 1. So there's 7 ounces of silver mined for every 1 ounce of gold. In terms of the daily traded value, and these are big numbers. I mean, if anybody asks me what is gold, well, gold is a currency. If you put the daily traded value of gold into perspective, it's the 6th largest traded currency every day. There is a year's worth of production traded every 3 days. Same for silver. So when you look at those two ratios, they should really be similar. And if you were to normalise them or equalise them one way or the other, using the current gold price, silver should be either $45 or $65. Well, it's had a great run recently. It's gone from 25 to 30. I think it's at 30 today. I think it's got a lot further to go. In terms of the photovoltaics and the solar market, I'll just touch on this briefly. I mean, again, the statistics here and the numbers are enormous and just growing. So mine production is 800 million ounces a year, and there's about another 200 million comes from recycling. 19% of every ounce mined last year went into solar panels. And if you look at a solar farm, we tend to work in sort of 1 gigawatt production units. So 1 gigawatt of solar generating capacity needs 3 million solar panels. Each solar panel has up to 20 grams of silver. So every 1 gigawatt is 500,000 ounces of silver. China installed 200 gigawatts last year. The world installed 300 gigawatts. Current solar generating capacity globally is 1 terawatt, which is a big number. To meet decarbonisation targets that have been set by governments, which we all know are ridiculous numbers and never going to be met, but if you want to get to those numbers, you've got to increase the number of solar panels currently by 70 times. The numbers are mind-boggling. If I don't think we're going to meet those numbers, but that direction of travel has been set. Solar is the cleanest energy out there. I'm not going to get into a debate about uranium. Uranium has a place in the mix, but silver is the cheapest renewable energy out there and the most efficient. In New South Wales, we have the benefit that silver has been declared a strategic metal or a critical metal. We yet to see what that means in terms of benefits to us. We're hoping there's going to be some free cash available. We haven't asked for it yet, but when we get through these studies, let's see what they say. But they recognise the importance of starting to move away from the coal royalty. So we think we're in a good position with them. In terms of the mine development, I mean, I'll talk about this. I mean, unfortunately, I don't want to talk too much about the 2018 numbers because they're very stale. I think the timeline there is really important. And when I was down in Canberra recently, we're just doing a bit of lobbying with respect to our. We've had a local action group that's fairly unpleasant and don't want us there. So we've been doing a bit of lobbying about that. But really, I mean, it's taken 5 years and a lot of money to get to the point where we're at now. And the next 6 months is a really important period for us. The final study or the optimization studies are out in the next sort of 2 months. We want to get into a financial investment decision before year end, and that then leads into front end engineering design. So if all the planets are aligned, we could be potentially sort of commencing the construction of this project in 12 months' time. So we're very excited by that, and that's clearly our target. Just a quick snapshot. This is just a section sliced through the pit. Whilst it's relatively low grade, this pit, or this deposit, what it really benefits from is that it daylights. So the ore body outcrops at surface. The strip ratio is 1.6 to 1 in the study, in the feasibility study. That is going to be lower. It's going to be quite significantly lower in the updated feasibility. But what you can see from there is there's some very clear high-grade zones in this ore body that make it really, really simple to mine. And there's a nose, that sort of shape in the bit that goes up in the middle. We put out an announcement earlier this week that just looked at, we've done some infill drilling there, and we're starting to see a bit more continuity in that area. So that sort of nose is going to be sort of engineered out. So in terms of the mine plan, we're doing a lot of work on the mine plan. We're doing a lot of work on the metallurgy. I mean, Richard's numbers were very interesting, and some really chunky silver grades. And this is not a grade competition. We're planning on mining 2 million tonnes a year, which will produce about 20,000 tonnes of concentrate, and our concentrate will have about 12,000 grams of tonne, 12,000 grams of silver per tonne. So it really is, we call it a lead silver concentrate, but really it's a silver concentrate. And what's really interesting from our discussions with the off-takers is that there is, and back to the demand side of the story of silver, there is enormous demand for high silver concentrates from all over the world. Everybody is chasing silver. Just touch very briefly on this, the optimisation. Since we did the study in 2018, we've done another 55,000 metres of drilling. We've updated the resource, upgraded the resource by 55%. We have not yet run the reserve on that new resource, so that's going to be done in the next month. We've got pretty good visibility that the current reserve of 30 million tonnes is likely to get to that 35, 40. So we're pretty comfortable that this is going to be a plus 20-year mine life here. And with that large resource, it gives you huge optionality. I don't know what the silver price is going to be in 6 days, let alone what it's going to be in 20 years. So if we get to the end of the mine life, or prior to the end of the mine life, I mean, if silver's hit 50 or if silver's hit 75, how much of that remaining 300 million ounces of silver gets converted? Who knows? That won't be my problem at that point. But there's huge optionality on this project. I'll finish on this slide because I'm just conscious everyone wants to get home. Just some cross sections, long sections through the ore body, and just demonstrates that, again, whilst we've got an enormous resource, it's still not finished. And what you see there on those sections is that we've got some really high grade material that sits underneath this pit that at some point down the track, whether that leads to a pit extension or a cutback and expanding the pit, or whether it leads to a significant underground development, sort of supplementing higher grade feed into the mill down the track, that's all a possibility. So I'll just finish on that side and the key conclusions on the project. Largest development silver project in Australia, 4th largest in the world. Huge resource, state government approvals in place. We're still waiting for the last environmental approval from the federal group, but we've been told we should be receiving news on that in the next 2 months, which will in line with our timing on the feasibility as well. And fundamentally, looking for an financial investment decision before year end, and hopefully this will change people's views on the silver market and silver equities in Australia. So, Christy, I'll leave it there.
That's good, solid advice to finish on, Joe Patterson. And Richard, thank you very much. Would you give our 2 final presenters today in not so much a silver shootout, but a silver educational? That was really good, guys. It's interesting. We've done little bits on uranium and copper over the last couple of conferences, and we haven't really done anything on silver, so that was good. I think we did really well. For those of us that have stayed here for these 2 talks, that was really good. So thank you, fellows. 41 investment opportunities you have had the pleasure of sitting and sifting through over the last few days. Remember that all the information for those companies that you saw will be either on their website, under the investment column on their website, or you can go onto our YouTube channel. So every single presentation that you've seen, we will actually be clipping them and we'll be popping them onto our YouTube channel at Vertical Events. And I would like to invite you all, I think I said it last year and a couple of you did take me up on the offer, but I think more of you should. It's a similar feel to what you've got over here, just perhaps with not as good surf straight out the front door. We've got a conference, it's called Southwest Connect. It's held in a place called Busselton in Western Australia. If you lived in Melbourne, you could get a flight directly from Melbourne across, but you live in a prettier place in Melbourne. It's really gorgeous. We have it, this year we're having it at the Broadwater, Abbey Beach Resort and Broadwater in Busselton, one of the really lovely parts of the world. A couple of the other things I do in addition to these conferences is a travel TV program based on Western Australia called Destination WA. So if you put my name in, destinationwa.tv, Chrissy, and then Southwest or Busselton, you'll be able to see what it is that's on offer down there, especially a little place called Denmark that's down that way as well. And you might want to go past and see some of the interesting places that we've got down there to either stay, buy a bit of property with the money that you're making. Why you got a sad face down there? What's happened? What? I don't know, you have to talk close to me.
Not sad, just listening.
You're just listening. What's your name? Ian. Oh, your last name is Cross.
Yep.
You'll be Ian Happy. So I know that feeling. I get that. All right, Ian. So where are you based here in Brisbane?
Gold Coast.
Gold Coast. I went out this morning and had a look at your surf and wished I had my board with me because that would have been absolutely beautiful. All right, team, I'm going to wrap it up there. There aren't any drinks at the end of the conference today because what we wanted to give you guys was a chance to beat the traffic and actually get home and not worry. I know that there are a couple of you that are actually walking distance of this place, so lucky you. That would be an absolutely wonderful thing to be able to do. But those of you who've travelled long distances to come and join us, thank you so much. Keep an eye on the Vertical Events website. And we really look forward, if you want to come to the Southwestern Connect, come down and see us. 2 days, jam-packed, great food, great people, great 16th and 17th of October. So it's towards the end of the year. And the weather's really, really lovely down there. Take care, everyone, and share the information around, okay? Thank you. Thank you, Richard.